Hello, welcome everyone. We did a sound check. We want to do another sound check just to make sure everything is hunky-dory on the sound level. What a wonderful time it is to be a trader. It's fabulous. Wanted to welcome everybody. And yes, we're going to have this recorded and we've got 1 hour to spend together. It's exactly 4:31 according to this clock. It's 4:30 on another clock, so I'm not sure. iPhone time currently, folks, it's 4:31, so we're right on time. All right. Where do we start? Persons, pivots, and trading indicators. It's kind of an interesting concept. Please take a moment to read this risk disclosure. Trading's risky. Past performance is not indicative of future results. Well, we've got a lot going on, and I think a lot of people that are new to our community that may have met me at either the World Money Show in Orlando or the Traders Expo in New York City, which was kind of a crazy time because I had to get off that stage, go down 7 stories, get into my ride, and have him drive me at exactly 2:30 from Midtown Manhattan at the Marriott Marquis to get me to JFK so I could board a JetBlue flight at 3:55. Again, leave Midtown Manhattan at 2:30 to board a flight at JFK at 3:55. I actually won a $20 bet by a friend in the audience, and I'm sure we will be seeing him at the next expo. And I keep saying this at different recordings because, boy, I'll tell you what, it was a little stressful getting there, but we made it. A lot of people had an introduction as to what persons pivots were, what the PPS indicator is, a volume study which we created, which has been, and this volume study, I'll share with you that a little bit. And then this relative strength indicator, which many people are not familiar with, and it has just been really an incredible product for traders, which if you are on Thinkorswim, we've added that it's called the PMC indicator. Now, we've done webinars before on this. We have multiple educational studies on this and courses, so we're going to just touch a little bit on that. We also have this thing called the last conditional change indicator. So last conditional change, my PPS, persons pivots, volume study, high closed dojis, all of these were all mentioned in this book that came out 13 years ago. It was written 14 years ago. So Candlestick, and the reason that book is there because my hair is a lot grayer, and this book, as it states, gives setups for stock, forex, and futures markets. I should have said cryptocurrency if I had really good insight back 13 years ago, but as it is, this particular book, the pages and things that are in there are creating indicators and have developed a dynamic trading methodology that has been true to form and has stood the test of time. Let's talk about what we are dealing with. This is, in the old days, we used to put things on an Excel spreadsheet. This is TradeStation, and what's interesting about this is we are able to put on our radar screen exactly what the signal is and the various time frames, such as a high close doji, whether it's a PPS buy or sell signal, whether the daily trend versus for the pivot point is up or bullish, and that's the pivot status there. So in other words, if we have a pivot status where the pivot point, which is, as I'm pointing here to a 60-minute chart on the Russell, if the blue line is above the gold line, it deems it as a bullish bias to the market, and that gives us an idea of what the market condition is. And under that idea, it'll paint what the support and resistance is for the next time frame. And these are all calculated at the end of the day. So basically, we've taken our methodology and applied it into various different platforms. And some platforms are a little bit better than others at digesting. This is the exact same chart that we just projected to you in a numeric form off the radar screen in the prior slide. This shows that if the market is bullish, it projects or paints a picture of persons pivots giving a higher high, higher low combination. And again, how is that created? It's created at the end of the day. So if you take the low value, the high value, and the close, and take the high, low, close divided by 3, that's where we get our pivot point. The only difference is that I don't give out 14 different supports like R3 and R4, and now I heard there's R6, and I have no clue, and S support and resistance all over the board. I'm not really interested in that as much as I'm interested in markets projecting and telling me, is the market in a bullish phase? And if so, there are certain things that I like to take, such as if a market falls to pivot support, then I'm looking for buy signals. If it has trouble breaking through the pivot, which is the blue line, then I wait till it closes through that blue line. While I might not be as profitable, I'm going to have a higher probability of profits, and that's what we're looking at. So these are daily pivots. This is a 15-minute chart. So I think a lot of people miss the mark on what the heck we have done with the pivot point analysis, and some people get it, and it's been a very dynamic trading methodology. And I think one of the things that a lot of folks miss is that that blue line, which is the pivot, which is the typical price, can in certain times, especially very bullish market conditions, act as support. So if the market does not break the pivot point can act as support. If it acts as resistance when it breaks through, it's going to be a very formidable support level. So this has been the Russell. We've focused on the Russell, and what I wanted to bring to your attention is this is my weekly advisory service. Basically, it focuses on equities and the overall general state of the market, such as the S&Ps, the Qs, the Russell, the diamonds. And we go through a lot of different market analytics, such as using, just to let you know, weekly pivots, monthly and quarterly pivots. So this is I did not prepare this, guys, for you specifically. This is our current weekly thoughts and observations advisory service. We still use Genesis software. And we take a look at the dynamics of equity prices in several different formats. First format is we look at a daily chart of the spiders, the Qs, the Russell, the Dow Jones, and the NYSE. Then we take a look at what we've created was we broke down back in 2009. I had Pete Killman at Genesis create for me a breakdown of the S&P 500 advanced decline. At the time, the Genesis and most people and everyone had the advanced decline on the NYSE, the New York Stock Exchange Composite Index, the advanced decline comparative analysis. But I had him break it down for me for the Dow, and I had him break it down for me in the Russell, and I had him break it down and create it in the spiders, the S&P 500. Because I personally do not trade the NYSE, and many of you do not either. And now, since this market and our environment is so sophisticated, ruled by computer trading, execution by artificial intelligence, and looking at sector rotation on steroids. In fact, it seems that we go from loving blue chips and then this week right into the Russell, small caps, and still with the flavor of positive upside in technology. So I break down, and my analysis still uses what we wrote about in this information, and we take a look at other things such as the weekly analysis, the S&Ps. What does the weekly breadth and the weekly volume and weekly trend of seasonality look like for these different various sectors? Just to give you an idea, here's something that we wrote about which we were positioned for, and I positioned my clients for. Many of you know this. In the Russell, we were looking for the Russell. This is a spread chart of the Russell versus the S&P. If you're long Russell and short S&P, you're looking for the spread to widen. So we were more focused as in a seasonal position of the Russell to outperform the blue chips. And guess what? That happened. And yesterday we ended up near the close getting out of the trade, which was a good thing. Today we actually rotated into the NASDAQ 100, and I'll share with you why and why that makes sense right now. So little things that we look at every week in this weekly thoughts and observations, such as the knob spread, T-bonds over treasury notes, little things that we look at like the Baltic Dry Index. We've been talking about that for the last few weeks, about the Baltic Dry Index had turned up, and it's in a seasonally strong period, and it's consistent with increased sales of grain. Corn and beans are in a strong seasonal trend, and quite frankly, we've been talking about the jelly bean spread, which is long July, short November. We're looking for a pullback there. Should get into around 24 cents between the old crop, new crop spread. And these are things that I think when someone says, gee whiz, John, you're just all over the board. You're doing stocks, you're analyzing this. You know, with the way computers are right now and the way we can have programs alert us to things like this, I think it's probably easier nowadays than ever to use these same similar technical analysis techniques and just be alerted to them a lot faster, allowing us to act on these ideas. And that's one of the amazing things. So I thought it'd be nice just to go through and say, what the hell did we talk about last week, and how did we come up with this information, and what's going on right now, especially after a major announcement by the Trump administration to impose tariffs on steel and aluminum. Well, one of the things that we noticed is last week we had multiple small cap names that generated weekly high close doji formations, and a few popular large cap names that scored big moves, like Sarepta Therapeutics, Esperion, which was in the news again today, Clovis and Vertex had big moves. And we had an idea that we were going to start to see a change in staples, in certain staples. This is one, Church & Dwight. Many of you would say this is a wimpy market, never heard of it. They make baking soda. The next one was ConAgra. We wanted to get a portion of that seasonality in the grains, and unfortunately, if you look at this, we had a scale-in feature function here. Sometimes we like to scale into trades. We got filled on 50% at Church & Dwight. We got filled at 50% on Spirit Airlines, and it missed us by, I believe, 3 cents on ConAgra, and the stocks, you know, it took off. So we've just canceled those orders. These are areas that we look for in relationship to the market, and seasonality still plays an important element in our stock picking ability. And in addition, if you'll see here, I'm not afraid of putting out weekly bearish trades, but I think the comment that I have is that risk-reward ratios and seasonality trends are determining, you know, right now it's not as prudent at this point in time to start selling some of these names. And cases like Apple, it still looks bullish, which makes me hesitant to recommend short stock position at this point in time. So that was the comments. This weekly analysis, it comes out every week in this format. In fact, last week we entered a position in the Russell. We tried to add to that position, and we were not filled, which is irritating as the dickens, but we did catch that long move in the Russell. Got nicked in Sonic. Picked up Philip Morris, and you'll see where we picked up Philip Morris last week at 104. It's nearly trading at 109 this week. So again, you'll notice that there was a big push for some of the consumer staples. Hewlett-Packard Enterprise, by the way, as a disclosure, long from 1593, raised the stop. Today we exited the entire position. We were out of that trade. Still long the dollar, Philip Morris, and those are some of the positions that we had. And year to date, on a cumulative basis, we try to put on at least one trade a week. We've averaged more than that, and we have a sizable gain so far year to date. So why are we looking at the long Russell? Now, that's not even to mention some of the trades that we've missed getting into, like we missed getting into Twitter by, you know, a little bit and things of that nature. What is happening that we're able to float between one sector and another? And a lot of it has to do with this information. So first off, I think it's important to say, well, what are you doing, John, and how are you doing it? Versus, hey, show us these indicators. You know, so what? Everyone's got indicators. Well, with TradeStation, one of the things that's really neat is that we were able to put on this, what we call the person's market catcher. It's a relative strength indicator. And it gives us numeric value, And I wanted to talk a little bit about this because it's also for you thinkorswim traders, the person's market catcher, a watered down version. It's not that watered, but it's slightly different. It's free. It's on thinkorswim. And what it does is it identifies a market in 4 phases, whether the market is improving, weakening, lagging, and outperforming. So you got 4 phases, and it does so. And I think the best way of describing it is just to get right into it. So let's use currently thinkorswim platform. Now, notice that I had mentioned that we are in this stupid little company called Spirit Airlines. Now, if you've ever flown Spirit Airlines, and I'm telling you, I've flown Spirit Airlines when we've gone to the Bahamas. We live in Florida now. And if you went to the Bahamas, you took Spirit Airlines. Now, they don't have first class. They only have like 4 big wide seats up front. Not a big deal because flying from Fort Lauderdale to Nassau to Paradise Island is about a 20-minute flight. But the problem is their departure and takeoff and landing times are a little bit off. They're more in Bahamian time than they are in real time. So if they say the flight's going to leave at 5, it may leave at anywhere between 5 o'clock today and maybe 8 o'clock tomorrow morning. So anyway, with that stated, the airline sector to me looked like it was getting ready to populate, and I wanted to share how we came up with the idea to get in on a long position on Spirit Airlines. The stock symbol is SAVE. First and foremost, we have a market that started to move down, but the person market catcher, and this is what it is, it's a relative strength indicator. It's extremely advanced. It's very powerful. It's an awesome indicator that gives you an idea both in terms of whether a market's losing its momentum or losing its relative strength. It will show divergence patterns. It'll also show what's called bullish convergence patterns. And in this case, it was starting to had this nice little breakout pullback. Some might call this a little cup and handle formation, but it looked relative to the rest of the airline sector, it looked a little bit better for an upside swing play for the week. There was another stock that we were looking at and stalking in our trading room, and the symbol, of course, is, and the stock was the one that I had to fly, was JetBlue. And if you'll notice the relative strength here, and what I wanted to point out, what is the different colors mean? Well, remember, I just pointed out there's 4 stages of the market. And the stages are, it is lagging, which is red, which if long, red bad. Okay? So if you look at what happened here when it generated this big old engulfing PPS sell signal, that's my indicator, PPS, that arrow, it was already starting to form a divergence. The market was making a newer high, and the relative strength index, or this relative strength indicator, was making a lower high. It is a zero-sum indicator, and the 0 line here helps to determine when a market actually turns negative relative to the S&P, and it's color-coded. Then when the market starts to make new lows, if the indicator starts to make higher lows, it's starting to show that it is improving and it's getting ready for a pop. If you start to look at a move that turns bright blue, that means it's outperforming the market. So bright blue is very good if looking to take long positions in the marketplace. So that's just JetBlue. So one of the stocks that we got into and we just exited today was Hewlett-Packard Enterprise. And we use this, and I think a lot of stock traders and option traders are going to love this. If you utilize this correctly and learn to use this, you'll notice that even down in here, when the rest of the world in the beginning of November, Hewlett-Packard Enterprise, HPE, was starting to outperform the overall market. It had this big little break, but look what was going on. And right before earnings is when we captured a long position in this stock. It started to see the relative strength while it was still outperforming the market. We had this nice little push to the upside. So Hewlett-Packard was one that we had stalked and gotten into ahead of the earnings because it was already showing signs of appreciation, and we just got out of the trade today, by the way. So we're flat this trade in a nice upside move, damn close to 20%. So we're very happy with that. So to illustrate how does one look for better trades, this is one of the major indicators out there that we utilize. But with TradeStation, what makes this more special is that I can see the color on the screen. If the color is red, it means that the market is underperforming, and I do not want to be long that market. So let's take a look at another example here and see how a couple indicators that I've created are just smashing market performances. First and foremost, this is a tool that everyone uses, or a lot of people use. It's called the volume histogram. We were on the warpath since 2008 teaching people a better way of looking at volume trends using Joe Granville's on-balance volume indicator. But it's not perfect. So I created an indicator that I found to be extremely efficient in that it measures the rate of change of volume in terms of percentages. And what it does is it gives me a more truer picture of the rate of change of volume on uptrends versus downtrends. So it's very sophisticated, and we call this the person volume indicator. This is proprietary and only available on my professional package at TradeStation. It will never be available, so don't ask Thinkorswim and don't ask me. Repeat, never say never, but it won't be available on Thinkorswim. So this is a highly sophisticated volume indicator, and it's reserved for my professional package with TradeStation users. This particular indicator has been more dynamic in allowing us to detect divergences in volume patterns. Now, if you look at McDonald's, which is really interesting because the relative strength started to weaken way back in December before the holidays, and even though the stock went up and it continued to move up, look what it did by the time it made that peak. It had a complete bearish divergence in the relative strength, and even the volume indicator made that extremely effective, noticeable relative comparative analysis here on volume. You see that bearish divergence. This last rally, if I get rid of all my markings here, sorry about that, but if you look at this rally to the upside, on balance volume showed an upside move, and even the volume histogram showed an upside move, giving people a false sense of security, whereas this indicator said, something's wrong here. And this indicator would have kept you from buying McDonald's. You may not have shorted it, but it would have kept you and avoided a landmine in McDonald's. That's number one. This is Occidental Petroleum, and it's the same thing. Occidental Petroleum, and this is really weird because back in July, I was in London giving a presentation, and one of the strongest stocks that I had under the arsenal in the energy complex was in fact Occidental Petroleum, and we made money on the long side of this stock. Why? We had great volume readings, we had improved relative strength, and the stock actually did perform quite nicely. But as we got into the year, into right before the major February crash, you'll notice it made newer highs. The volume, as it was rising in price, the volume histogram was going up, giving false sense of security to traders using volume analysis. And even Joe Granville's on-balance volume was moving up to support the idea that possibly Occidental was a safe play to be still long. However, the relative strength, as the stock was moving up, the person's market catcher was going down. In fact, it was a major warning because compared to prior highs, this was what we would call a blow-off top. It was showing a classic bearish divergence. If you line this up, these are the person's pivot resistance on a monthly basis with a PPS sell signal. And if you'll notice, wow, it was set up for a decline in the market. So this was one that whether you shorted it is one thing, but at least you would have been able to avoid the landmine. These are very, very powerful tools, and I am thoroughly convinced the institutions use very similar programs or something of this nature because we seem to be tapped into it. And the thing is that with these types of indicators using TradeStation, what's very powerful about TradeStation is their radar screen enables me to see data, run scans, and say, is this a sector that's outperforming or underperforming the market? And is the stock starting to show signs of a trend of relative strength outperforming the market? That's what's so neat about this. As I just mentioned, these are the scans, and just in case something crashed, I have a PowerPoint presentation that I wanted to just to go through that you guys can see this. We have the relative strength. If we get a buy signal and we start to see upside movement and high closed dojis, which is why that candle is orange right here. Look at the relative strength. It's gone from being red to fuchsia. Fuchsia, or that pink color, that says the market's improving. Blue, when it turns bright blue, it means it's outperforming. So that is why we look for buy signals when the relative strength's improving with an absolute improvement in volume trends. So that is one of the things that I think that running scans to find out how many buy signals are we getting and how is the relative strength and the volume combined confirming, keyword, confirming those buy signals. So this is like really crazy. So here's what we've had, and a lot of people were asking about this because we introduced at the Traders Expo, and many of you, if you were in the audience at the Traders Expo, I shared with you a trading system on the VIX, in which, by the way, if I may add, today's price action in the NASDAQ, the Qs, we seem to have broken out in the breadth or the advanced decline. We just made a newer high in the advanced decline on an uptick in volume, and even the on-balance volume is looking wholesome. I'm expecting to see the absolute upside breakout be tested in the Qs. I just give you a quick glimpse as to the reason why. Number one, if we go up to our sector, if you're interested in this, just to put how this really works in real life, this is now, and hopefully it fills in and everyone can see the screen. This is the relative strength right here, and these are the actual daily buy signals, fresh buy signals, and these are what's populating right now that will generate, if the market closes here or higher tomorrow, which is Friday, it's warning us right now, these are the net changes that we're going to get, or signals that we're going to get. A low closed doji is bearish, a high closed doji is bullish. So we're starting to see these blinking lights mean the market, or whatever this symbol is, they are starting to cross thresholds like JETS, the airline sector ETF, or for example XBI, which is biotech, which would weigh in on what? The NASDAQ 100. And then if you take a look at all of these top sectors except for this one, the XSW, the FDN, IGV, XSD, and SMH, those are all between internet stocks and of course semiconductors or technology combined with biotech. What do you equal? Extraordinary strength that would weigh in on the NASDAQ 100 for upside momentum. Anyway, that's what we are looking at, the relative strength in all of these spaces. If you notice, from IBB all the way up is bright blue. So those are outperforming, and relative to the S&P 500, those sectors are outperforming the market, and that's pretty cool. While the Russell, the IWM, is outperforming the market on a daily chart analysis. If you're interested in knowing where should you be trading, where do you want to be focusing, notice that we started to see an outperformance relative to the market. It started to improve right in here, and there's one of my little high closed doji patterns. So we got a launch and a liftoff in the market. The volume's a little iffy here, so I'd like to see by tomorrow that volume uptick, and if it does, then it would be my supposition and anticipation that the Russell will also go up to not just test that high, but we could see a breakout to newer highs into the next few weeks. So I thought that would be kind of an interesting concept to go over as to where are we getting these ideas to trade and what does the relative strength analysis look like. So by taking a look, these are our thoughts and observations. First and foremost, the dumbest market you ever would think of, Philip Morris, right? I mean, if you're a individual who, as a swing trader, you're looking at maybe Momo or you're looking at Apple or you want to do an option trade, not many people are thinking Philip Morris. But as you can see, this stock's up nearly 5%. It's almost 2% today since we entered and were long from less than a week ago. Kellogg's, Tony the Tiger, they make Pringles. Don't go on a carb-free diet. Help the cause. We're long a little bit of this stock. We scaled out at 50% today. Church & Dwight, the makers of baking soda. You'll notice the combination of all of the stocks that we're in all are fired off on a blue, a bright blue relative strength. So not only are they in a bullish bias, not only are the weeklies in bullish bias, so that's how it has helped us to say what's the best stocks with the limited risk that might give great returns, the high risk reward ratio. I'm pretty sure I can teach people colors, blinking, and things of that nature is something that's very dynamic in helping people to make better stock selections. Now, what about trading? Now, this is pretty dynamic because we don't have a lot of time to go over today, but I wanted to share with you what is an extremely dynamic trading system, something that we introduced to people even over a year ago at other seminars, our live trading seminars that we did back in May. Besides looking at the GBTC, which was the Bitcoin ETN over the counter that no one really knew much about trading, which turned out to be a dynamic system in and itself, until the Chicago Board of Trade and the Chicago Board of Options Exchange came out with their futures version. This is the volatility index, the VXX. We're quite proud of this and my signals and the system on this. And these are kind of the difference in this system. And currently, the system is short the market right now. It has an open trade equity profit. And that's what you're looking at your screen here. This is the closed-end profit, green. Fuchsia is the open trade profit. This is the same product, and you'll notice there's a little bit difference between performance. The difference is this is long and short, and this is short only. Now, why short only? It's real interesting. If a stock market goes up, what happens to volatility? It goes down. And if this is an ETF that trades off of the futures market, and it does, the first two front contract months valuation of the Chicago Board of Options Exchange VIX. So think of it this way. There's always fear in the forward future of a catastrophic event. As time passes and you get closer to the future, right, it becomes spot market. With no catastrophic event, what happens to the futures price? Well, it comes in line with the cash. So you get what's called a volatility, a vol crush, or you get a contango crush. And so with that stated, this product is designed to do one thing and one thing only for an equity market that on average goes up a lot more than it goes down. An equity market, on average, goes up more than it goes down. On average, the stock market, over time, does nothing but go up. It does not go down, right? Until we get into a bear market or a recession. With that stated, this one feature is designed to do one thing and one thing only, go down all the time. If we change this up to a monthly chart, I don't know if I'm going to ruin the system, but is this a good definition of what it's designed to do? Go down all the time, right? So not too bad of an idea that if you have a product that's designed to go down all the time, to look for only shorts in this trade. So if it rallies, don't be long, but then when you get a sell signal, trade the short side. All right? Now, I have not optimized this system, so that's why you only see 3 shorts, because we have to change the settings, of course, for the time frames. So I wanted to share this dynamic system with you guys because this became a product via our what we call the Algo optimizer, the John Person Algo optimizer that we created. It's a system. It's not really a system. I'll share some ideas with you. And the ideas are simply this. It allows us to select, if we're day trading, the time of day to trade. It allows us to get out of trades before the end of day. It allows us to choose our position calculation method. This is extremely advanced, so listen up. Position calculated method number 1 states that I have $100,000 to trade with. Whatever the value is of the stock, get me in as many positions as you possibly can based on my equity of $100,000. I could set that to $10,000. I could set that to $1,000. I could set position calculated method number 1 just automatically determines how many positions you should be in for the money that you want to invest. Position calculated method number 2 says position risk. If the risk is $1,000, then it's only going to get you into 1 trade. If the risk is $10, it's going to get you into 1,000 trades. So position calculated method number 2 is designed for you to figure out, or it calculates automatically and executes and will figure it all out and put the trade on per your defined risk that you want per position. For futures traders, we have position calculated method number 3, and we usually typically on our models use position calc method number 3, which is standard as 2 lots. Why 2 lots? Because in our money management concept, we have the opportunity for a scale out, and you can't scale out of a 50% method, by the way, if you're only in 1, so it makes it kind of difficult. So the performance on the difference between a short and a long is pretty decent. I mean, a profit factor of almost 3 to 1 is pretty dynamic, right? So I mean, what are you looking at for the and by the way, we have to go back, and I think I've just did a boo-boo here, format the strategy, and it only goes back 2 years. We're going to go back and look at the last 8 years when its first inception, and that will and as I just goofed everything up, that was kind of a problem. Format strategy. I shouldn't have changed that function of going from a daily to a monthly chart. It didn't like that. So let me go back and try to just go back. First date. There we go. And it's going to have to take time to go back and get the settings back. This is the strategy and the performance, by the way, of taking longs and shorts. This has a little bit different profit factor, not nearly as great. However, it has a substantial better rate of return for its investment over the history. The performance graph, it's at this point in time right now at a new all-time equity high. This is a very serious product and a serious program based on the Person Algo Optimizer. So I wanted to share that with you and go through what some of these things were. And this is what the ultimate, what we call algorithmic optimizing program is all about. It's really taken me over 8 years back and forth and getting things together. We define stops, risk management. We get to choose our position size based on either your capital, your leverage, or per risk trade. The time in a trade. What's your average holding period? This thing can optimize to find out maybe being long the market in gold, you should be long on a 15-minute chart only 8 bars, maybe 12 bars. On a 60-minute chart swing trade, maybe you should only be in 72 bars. Do we absolutely know? Well, this allows you to optimize to find out emphatically in actual numbers. So we can control from over-optimizing when volatility changes. And products to trade include stocks, ETF, ETNs. Now this is a gold since the beginning of the year. This is the April futures contract trading 2 lots. In fact, that is the gold product right here. If we take a look, we have 2 variations. One has $22,400. We'll take a look at the Algo optimizer, and you'll see very, it's not as smooth, but again, let's take a look at this. A profit factor of 210. It's taken 72 trades year to date, 38 longs, 34 shorts. This is a 60-minute chart. So on 2 contracts, trading only 2 contracts, it's not a bad performance. And it's got a great profit factor of over 2 to 1. If we go back to this model, this is a different variation. And we'll take a look at, as I wanted to share with you, the difference between this latest release, and this is the latest release. And let me just go over and format strategies. This is what we call the Algo Optimizer number 15. Now, this is what makes this insanely cool. And when I say insanely cool, we know that in the October period for most of the markets, there was no volatility. If you day trade E-mini S&Ps, gang, we had a 7 to 9 handle. That's 7 to 9 points in the E-mini S&Ps for 12 trading days in October. Right now, we're close to 50 points in the S&P on an average true range. So we had a defined difference of a level of trading volatility for both not just equity traders, but crude oil, gold. Nothing was really moving. And if you don't believe me, look at the earnings for a lot of these banks who had not a lot in trading capital returns because there was nothing really to trade. It was difficult. And many of you know this. What's really cool about this is I wanted to share with you how many people would love to find out, should I take a buy signal on a PPS and can I optimize, should I wait for a buy signal to break out above John's last conditional change? Or a high closed doji? Or should we have a last conditional change? How many bars should I be in that trade? And I can optimize that, and I can click on this and say, well, start at maybe 1 and let's stop at 100 bars and then optimize that, hit run. I'm not going to do it right now because I don't want to tie something up and get bogged down. But this is the kind of functions that we develop based on using our criteria and our setups. And these are the kind of signals that you get and when determining. So on 2 different models, this is the older version and this is the brand new version. The difference is this. They're pretty close in profitability. Let's face facts. If you compare an apple to an apple, 22,400 versus 24,800, I mean, okay, a couple grand here and there, not a big deal. It went short, it went short. It went short, it went short. This went long, though, and it took a slight profit. If it's a blue line, it means it's profitable. If it's a red line, it's a loser. So what's the difference? Why is one better than the other? So we could take a look at that, and we'd go, here's the first thing. This one did 72 trades to provide that type of profit. This one does 111 trades to provide a couple more grand in profit. What would most people want? Some people like more trades. I prefer less trades. Filter the trades out. Funny thing is, if we go through, and I just want to make sure that we're all on the same page, the settings on the strategy are pretty much the exact settings. Max bars to holding is 44 periods on both systems. Risk-reward ratios, the same thing. So we have a lot of the similar, everything's similar, but one has a function of saying, guess what, guys? This won't take a buy or a sell signal unless it gets a last conditional change breakout on certain signals, and it helps filter out and reduces the amount of trades you do for darn nearly the same amount of profitability. That's the dynamic difference. So finding out what works best is what's really cool. This is Amazon, is very similar in nature. If you notice here, we'll go through and go format system. This is the original version, Person Algo, and then this is the newer version, and this is number 15. I just want to make sure I was on the right page. And you'll notice here for Amazon, what's the difference? This is 66,000, this is 62,000. What's the difference? Well, if we go up to our strategy report and look at our performance summary, we'll notice that it has 62,000 with a 1.66, and it's traded 354 times since the beginning of 2017. So this is a year and 2 months old, right? So we've got 14 months. That's a lot of trades. Backtest studies share this is still a pretty amazing product, a profit factor of over 2.26. What about this one? The profit factor is 286 on Amazon. It trades less than this system traded by not nearly half, but damn close to half. Half the market time in the market, half the trades, better performance on Amazon and giving more capital rate of return. This is pretty decent trade system for a swing trade. Now, why is this pretty cool? Well, whether you're trading futures or you're an option trader on equities, to get an idea of where a signal generates a buy, it paints where your stop should go, and it gives you an idea of what your profit target is, the first one, and then your max out profit target. What did I mean by max out profit target? Well, let's say, for example, generally speaking in this environment, you have a max profit target, have a kill switch. I don't want to take a loss any bigger than 1,400, and if my swing trade makes any more than 2,700, then get me the heck out of Dodge, because generally speaking, when you have that type of return in 3 to 4 days, on average, through the history of this model in this environment, that's your max profit. So it will max out, and so it does give you what your main profit target is and what your max out is. So not too bad in that sense, and that's what the Algo Optimizer does. It allows you to adjust, not to over-optimize, but maintain markets at your own discretion if you're an active trader, so that A, you can adjust your system for periods and changes and volatility. It is an extremely sophisticated product, and it has really awesome results in all markets. What's neat about this, you can get signals and trade it at anywhere you want, but the whole point is that you have certain choices. Number one, keep in mind if you're day trading, whether it's the E-mini S&Ps, crude oil, euro currency, and we'll talk about euro currency in a second, gold, or whether you're looking at bonds or the volatility product, of course, if you're day trading, you can optimize for the best time of day to trade. And what we created, which is not shown here, we created 2 different start and end time for day traders. So for example, if you wanted to trade right now euro currencies, and if you were wanting to trade maybe gold, let's go with gold real quick. So if you want to trade gold and you say, you know, I'm bearish gold and I'm going to trade gold in the Asian session, I would start this at maybe 1,800 hours, right? Or 1,900 hours. And I don't want to take any trades. If it generates a trade, I want to take, if I'm bearish gold, I want to start looking for sell signals in the Asian session to maybe the European session at 3:30. I want to trade that as my first block session, and I only want to take sell signals. So I'd turn off the buys by going 0 for false. I'd go bullish high close doji. I'd go 0. And you know what? Now I'm only trading a sell signal in the market. I'm only taking sell signals. So I'm selling only through those time periods. And if I say, you know what? I want to trade gold at 9 a.m. until 3 p.m. And guess what? Now I have 2 block sessions that I'm trading, a start time and an end time in 2 different sessions in 2 different markets. So whether that, we're going to cancel all of that, I don't want to screw all this up, but this allows a trader to optimize, should I be trading, especially this is for those that are looking for futures trading. If you're trading the European session, number 1, if you wanted to trade crude oil or gold, which is active in those time periods, or if you wanted to trade the currencies like we've done and seen many, many years where the market action is all about, it starts in Europe, right? How do we execute this? Well, 2 ways. You can generate strategy orders for display in your strategy order tab. You can auto execute, and you hit this. When you check this, it says, do you agree to the terms and conditions? And you say yes, and you have a choice now, a third mechanism of fail-safe. Do you want this to trade with confirmation? Every time it says, we're going to execute for your account, boom, and execute X amount of positions, shares at this price, market order, yes, no. If you say yes, then it fires off. So you can have it on for confirmation, and if you have it on, a box will pop up every time there's a trade, and you can trade anywhere you want. You can go to a cheat and go to Interactive Brokers, or you can use the fair commission rates that TradeStation now has. So a lot of people that used to use TradeStation, they might not know this, but they reduced the margin requirements on most of the markets that you can trade with them, A. B, they no longer charge for the radar screen. They used to. It was really costly. And they no longer charge for the scanner. So they got competitive with the market to get and earn the trust in the business from people. So what's really cool is you can trade the system with either A, confirmation, or B, you can trade it discretionarily. So the reason this is extremely special is many of you guys that are into trading systems know that there's a lot of people that charge monthly fees anywhere from $89 to $350, and they control your position size. What does that mean? Well, you rent the system out and they send you signals, and you can only copy or trade the system or that one market for $100 or $200 or $300 a month. This allows you to trade anything you want, all the positions you want. This is your own optimized program. Most black boxes can't or do not allow you to optimize because they don't want you to see what's behind it, and you can't change for your own trading times and your own style. But this thing allows, it's an amazing product, allows the user to custom tailor the time sessions you want to trade. You can trade it automatically or manually as a discretionary trader. The quantity you want to trade, the markets you want to trade. You can trade long and short, or you can take both longs and shorts. And I just illustrated that particular scenario. Now, it's a one-time purchase fee. We had special licenses, as this is part of what we use this for is in a fund that's trading the VIX currently. And it is a very dynamic product. Now, a lot of people in the hedge fund world, they don't care what they do. Their clients don't care what they do. They just want performance. They want results. Some of the retail traders doing it on their own, they don't feel comfortable with that. They just want to maybe, trade crude oil, or they just want to trade, grains, or they just want to trade what they're used to, and that's okay. And that's why people flock to managed funds, because it just says, you deal with it because I can't. This is a product that we only have so many licenses due to there is an acquisition of the product, and we wanted to also ensure the integrity. We originally had 78 licenses, and we have less than a dozen. I have not marketed this. You've not seen me talk about this often. It's been very quiet on the low T. We wanted to make sure that we came up with version 15. We tested it. It went through beta. We just released it, and we have all kinds of training videos on the website. What's really neat about this, I'm going to go through this website with you real quick. I'm going to share this with you. And this is just absolutely exciting for a retail trader. I mean, because this is as close to having your own PhD rocket scientist program your own ideas on your own basic platform. So we have these videos that we put back together, Q&A sessions we record. We define exactly what each section is all about, position calculations, what they're used for, money management, how to utilize profit loss thresholds, money management, every one of these. And then you'll notice here that in what I did, which was unique, was that I gave, like, for example, instead of just giving a video saying here's what section 4A exit strategy is about, I gave a 15-minute strategy setting with the complete details that would help a trader build upon that strategy so they can optimize for their own tolerance and risk. We carry that out with the 15-minute ES. We also created a, again, section 4B. Then we had the E-mini with a 5-minute day trade program. Then we changed it up with gave an example of a spider 90-minute setting. And then we had a 60-minute crude oil that gave the details of the setting. So we gave Amazon, the one that I just shared with you with Amazon, it's this setting right here in that model right there. And then again, the volatility VXX. This product right here, everyone got the TradeStation workspace file for that system right there that you saw on your screen with that exact performance. Now, we use this in our trading room, not just for identifying trades in the VIX, but also, or the VXX, but also when you get a sell signal in the VXX, it signifies that the S&Ps are going to have a rally. So it helps give us an idea of the market. So not only did we give out the volatility, Amazon, Apple, and then a mini Dow, which was absolutely crazy over the last few months, especially, and then again, the new release of POA 15, and then how to run multiple systems, and then announce. So all of these video trainings, they weren't just here, you know, throw you to the wolves. And we also back that up with continued education in monthly webinars. So this is a one-time fee, and in order to get the Algo Optimizer, you need my lifetime package in the radar screen. If you're interested, call for details. This is something that's not marketed. You can go to the website. You can read about the Algo Optimizer. I'll share that link with you in just a second. It's you can go to personsplanet.com for more information regarding this product, and you will see, if you go to personsplanet.com, indicators, Algo Optimizer, and you can read a little bit more about the Algo Optimizer right there, and then take a kind of a video tutorial of it, and there's the pricing and how you can find it, and you need to call our office as far as us finding out if this is something that you're qualified for. This is not something for a beginner, and it's not something we're selling and leasing to professional traders. So therefore, if you are a professional manager, this is not available to you, and that's the way it is. So with that said, I wanted to go through top to bottom exactly what we had going through in the market, what's happened out there in the trading community, new products that are out. This is the one that we've really focused on, using the Algo Optimizer as a trade base, but also letting people know that we still have a lot of fortunate opportunities trading with Thinkorswim, and the indicators there, their scan feature, and for those that aren't in the know, the person market catcher. I didn't discuss how to get it, so let's show you how. If you go to studies and add studies and you go down to my name, now make sure you get my name because I'm John Person. You will notice it says PMC, PPS, Person's Pivots, all start with three things. Person's Pivots, and you can, if you insert Person's Pivots, it defaults to daily. So you go up to studies, you edit the study, and then you need to go to the wheel, change it from day to maybe month or week, hit OK, apply, hit OK, and now you have monthly pivots overlaid on a daily chart. And now that you can see that we have Hewlett-Packard, which pulled back to monthly pivot support, generated a buy signal while the relative strength was going upsy-daisy. Now you can see why one would be looking for that trade and why we did look at that long position. So anyway, kind of amazing technical tools in a technically driven market, in a market that's driven by computers, which I think we all agree that computer trading is not going away. If anything, it's becoming more advanced. With that said, thank you all for joining us. That concludes our session today. Have a great rest of the trading week. That's tomorrow. We'll see where the monthly unemployment reports. And if you're interested in any products, signing up for our weekly thoughts and observations advisory service, simply send us an email. You know where to find us. We've not gone anywhere, only been around for 37 years. Thanks, everybody.